Hi there, welcome to Kneppy Invest and welcome to October 30, 2024. I'm recording this video a little bit earlier than I usually do. We have about 1 hour and 50 minutes left of trading today. Haven't been really following the markets all too closely today for various reasons, which I won't get into. But I am a little bit surprised to see the XJO down at 0.8%. I do know inflation numbers came out, so maybe that has something to do with it. I can explore that path a little bit later on in this video. Tech up a little bit, results up as well. Now, NASDAQ was up a fair bit overnight, about 0.8%, 0.98%. Dow Jones down at 0.36%. So I expect a little bit more when it comes to tech companies. And Alphabet did release their results after the markets had closed. And I'm pretty sure we're going to see Google or Alphabet up a fair bit overnight. I would suggest maybe between 5 and 10% because their results beat expectations by a fair bit. In fact, I might actually touch upon Alphabet's results because it is quite fascinating what's happening over there this week. All the major companies, well, maybe not all, but many of the biggest companies are releasing their results this week. Okay, so the agenda for today's video. I do have to keep this video under 45 minutes. I am working today. I actually am doing an emergency shift, which means I do get paid a fair bit. So I am technically on my lunch break right now. That's the reason why I have to keep this video under 45 minutes. Okay, so the agenda of today's video, we'll go through the ASX Today, looking at the best and worst performing companies, indices, and also indices, and also sectors. Then we'll have a look at the top 5 stocks of the day. I was thinking of including Alphabet into the top 5, but I do like the 5 ASX companies I have included in this particular list of companies, and the share price movement hopefully justifies me including these companies in the top 5. I'll still have a look at Alphabet, have a look at the earnings calendar, also have a look at trading economics, what has moved the markets today, including inflation or CPI, and then have a look at Capital Brief. That's all before we have a look at the ASX Today and the top 5 stocks of the day. And then if I have time, I'll go through some of your comments and maybe a chart or two, depending on how we go. Okay, so let's have a look at earnings report. Why not? So this is NASDAQ earnings calendar. So Alphabet did release their results after markets had closed. Now, I'm pretty sure yesterday they had it before markets had closed. But anyway, what they do on this particular site is they look or compare consensus earnings per share forecasts and last year's earnings per share. And you can actually compare the consensus forecast to what actually happened. And Alphabet actually kicked it out of the park. And in fact, if we open up Alphabet, you can see what the aftermarket trading is thinking in regards to their results. And yeah, so beat results by a little bit. Actually, they haven't got it in here yet. So this would be at least 5 quarters in a row that Alphabet have beaten their guidance. So they haven't actually put the September results yet in this this page, but they did beat estimates. And after hours, this is what I get excited about. After hours, I said I wouldn't be surprised to see the share price up between 5 and 10%. And right now, in after hour trading, Alphabet share price is up 7.65%. And you can do that for all the companies that have released results today, particularly after hours. For instance, Visa released their results. I have no idea how Visa reported, but all you have to do is go to after hours trading. In fact, you can do this. I'm pretty sure you can do this. Can you do this via TradingView? I'm not sure if you can do this via TradingView. I'm pretty sure there is some way you can do this. Get the after hour. No, they don't have it here. You actually don't see it in TradingView. But there's other sites where I'm pretty sure I know what I'm thinking about. You can do this via FinChat if you do have access to FinChat, and there is a free service, free FinChat service. But here we go. Yeah, so in after hours via FinChat, it's up 5.8%. So maybe there is a bit of delay there. not sure. But anyway, let's go back to Visa because this is another interesting one. Share price down today. But what is the after hours trading telling us? And up slightly. So more than likely, results probably matched or were close to expectations. Anyway, I'm going to move on because I am bereft of time today. But other companies releasing results today include Advanced Micro Devices, Novartis, McDonald's, and Pfizer. And then tomorrow, we're going to see Microsoft, Meta Platforms, Eli Lilly, Caterpillar, AbbVie, Amgen, Booking Holdings, UBS, Starbucks. In fact, I'm going to increase that to 50 because all these companies are really big. And then we're getting down to size of companies that I've never heard of before. Although DoorDash, I've heard of that. Aflac, pretty sure that's insurance. Coinbase releasing results. Interesting group of companies. Anyway, so let's go to trading economics and see how CPI, and straight away, CPI lowest in over 3 years. So straight away, I'm questioning, why is the XJO down a fair bit today? Was this number a little bit higher than expected? Or maybe if it's lower than expected, the market didn't want to see that. Now, I'm pretty sure the results or the numbers would have been released maybe at 11 a.m., maybe midday. So I'm just going to see if there was a big drop around that time. In fact, no. In fact, it's been dropping all through the day, and there was no significant drop at any point during the day. Yeah, so that's interesting in itself that we're just seeing the market just consistently drop all through the day. Okay, so let's go back to trading economics. So it was below forecast. So the latest result was below market forecast of 2.4%. So that's a fairly big difference. So forecasting 2.4%, and this came in at 2.1%. So have a closer look at that. What has caused our CPI to be lower? Looks like electricity prices. So this has been fueled by all these rebates we have been getting. So this has been really generated by the government. So maybe there's something in these numbers. Maybe everything else was higher than expected. I don't know. So I haven't delved deeply into it just yet. If you do know, I'd love to hear your thoughts. So leave it in the comment section of this video. Japanese shares gain on tech boost, up 0.9%. US jobs openings unexpectedly fall. And German consumer morale beats estimates. So German morale up. That's pretty good. Okay, now to Capital Brief. I'm just going to see if there's been anything happening among companies that I might have missed. I do have quite a few companies that released either training updates, AGMs, quarterly activities, Appendix 4Cs and 5Bs. We've seen a lot of those released today. I have listed them down, and I actually have circled the ones that I think need some more research. In fact, my notebook is over here. So I have written down probably about 50 companies who have released their Appendix 4C or 5B, and about 10, I think, need further delving into. Cettire shares plunge further on a weak Q1 earnings. What's further plunge? 15.5%. Just imagine you bought yesterday on open. So down 17% yesterday, down a further 15.5%. I actually think, if I remember correctly, I did mention that where the share price for Cettire was at the close yesterday was at a very important level. And the very fact that the one-day candlestick was really negative wasn't looking good. But the fact it closed just below that support level, and now I think we have confirmation that support level has been broken for Cettire. Okay, let's move on. Nothing Venture, Sweat Equity, what's that? Data3 shares rise on better than expected profit guidance. I actually did write that company down as a company that did have that AGM. And what is the share price up? Let's have a look. 6.33%. Okay, so that is one I did miss. Well, maybe not, that's not the right word. I didn't miss it. I just didn't include it in the top 5 stocks of the day. And possibly this belongs in the top 5 stocks of the day simply because a positive reaction from the market. Data3, is this time to buy? Maybe not. Maybe not. Still not a breakout, not what I'm really looking for in terms of a breakout. I'm really looking for breakouts. What else do we have here? Pilbara, shares rebound. Another company that I was thinking of including in my top 5 stocks, but didn't quite make it. Share price up 2.81%. Company did release their quarterly results. And they also released something else in relation to another company. And I included this other company in the top 5 stocks because this other announcement that Pilbara did release affected this company negatively. And we'll talk about Calix in the top 5 stocks of the day. But I had a quick look at Pilbara's report. Yeah, because of suppressed lithium prices, Pilbara Minerals activities wasn't that impressive, to be honest with you. But I think the market expected it. Liontown shares dipped despite Kathleen Valley progress. Another one of these companies that released their Appendix 5B today. I'm just going to see how the share price has performed. I didn't get much from Liontown Resources Appendix 5B. They called it Core Activity Report and Cash Flow Report. Exactly the same as a 5B. And anything else here? Talking about CPI, Capricorn Metals launches $200 million capital raising. We'll talk about Woolworths in a second. Woolworths shares fall on lower earnings forecast. Sierra Resources jumps on US funding deal. And Star Entertainment Group shares dive on Q1 earnings hit. 2 companies there, Woolworths and Star, who have both have made it into my top 5 stocks. Appen shares rise on Q3 earnings bump. Did not include Appen in my top 5 stocks, however. So let's have a look to see what Appen share price has done. Well, it's up slightly. Nothing to get too excited there. And plus, their Appendix 4C didn't really trigger any exciting thoughts into my mind. But then again, my mind can do weird things. And that could be about it. Okay, so let's get to the ASX today. And let's see what's been going on. What's been driving the market down? Why is it down 0.87%? And now tech's down. It just keeps on dropping. You can see that in this little chart. So the XGO, XAO are just been consistently, gradually dropping all day. Maybe it has something to do with the American futures. I have no idea. I thought maybe Alphabet would give a little bit of a bump to our market today. Obviously, that is wrong. Okay, so when we look at the different sectors, staples down big, 3.66%. I would say that has been driven down by Woolworths. Let's confirm that. And not only Woolworths, maybe what happened with Woolworths, their little update has seen some negativity come into Coles and some of the other staples today. So let's confirm that is what has happened. We'll do this by market cap. So Woolworths down 6.2%, which percentage-wise doesn't seem like it's a big number, but for a company that size and for a staple company, for a defensive stock, a decrease of 6.2% in one day is big. It is big, and that's the reason why Woolworths is actually my stock of the day. Coles Group down 3%, and that's probably because of what's happened with Woolworths. And in fact, a lot of red coming through for these consumer staples. GrainCorp is up. In fact, a couple of ag stocks are up, including Australian Agricultural Company and Cobram Estate Olives. Okay, so no surprise there, to be honest with you. Discretionary down, financials down. I think one of the reasons why we might be down a fair bit today, the XGO, is because of financials. That was my first guess. Let's see if that is true. So the 4 major banks down big today. Let's see if that is true. We'll do the same thing here. Looking at the market cap, and all the banks are down by between 1 and 1.5%. And that is probably one of the reasons why we are down big today, because of the banks. And in fact, if you have a look at the ASX 20, it is down by 1.1%. Small caps only down 0.68% and tech down 0.2%. So let's have a look at the ASX 20. See if it's just really the banks, maybe CSL's down as well. I noticed the healthcare was having a bad day. So let's confirm. I'm going to say 3 companies up, 17 down. Yeah, I get it. What medal do I get? Gold medal. What 3 companies are up? Let's have a look. Goodman Group, BHP, Aristocrat, and Woolworths is down. And again, Woolworths probably hasn't helped the ASX, not only the ASX 20, but also the XGO, because that is a fairly big drop for that type of, well, that size company, although market cap is only 38 billion. And yeah, there's CSL's down big, Telstra's down. So a lot of negative sentiment in Australia today. I don't know why. This is weird. Has it something to do with CPI? CPI is better than expected. Is the market saying, oh, the economy is struggling? But again, I think it's because the reason CPI is down more than expected is because of electricity. rebates, that sort of thing, which I'm not complaining about. But when I look at the country as a whole, is it a good thing? Is it a good thing? I don't know. Okay, so let's go to the best and worst performing companies on the ASX today. We'll start off with the top gainers. And this is where I see if I've missed anything big. For instance, a company called OD6 Metals, share price is up 58%. Another company called Tryptomine Therapeutics is up 39%. And Red Mountain up big, Amundi up big, although I think there is a takeover bid for Amundi Group. And Yandel, in fact, there's quite a few companies here up big on a fairly big turnover, including Lavoto Resources. I'm just going to stick to a few here. I'm going to stick to the first two companies, the two companies on the top of this list, OD6 Metals and Tryptomine Therapeutics, two companies I've never heard of before. So let's start off with OD6. Now, if this is just something ridiculous, a takeover, I'll just move on. But 72%, what have they released today? Acquisition. It's always an acquisition or drilling results. So acquisition of historical high-grade copper mine. On occasion, I do like these acquisitions because these sort of acquisitions, I'm not sure what this is. Is this a mine that has been in production and then it's no longer in production? And a lot of times what you do see is a really big mining company has these smaller mines and they just think, what's the point? These small mines do nothing for us. We'll just sell it to this small mining company. And that small mining company, just with this small mine, it can be company making. So I'll have a quick look at this once I've recorded this video or when I have a bit of free time, just to see what this acquisition is. But the market likes it. OD6. And now let's have a look at the chart. OD6 Metals. And yeah, look at that chart. The market didn't like this company. They listed back in 2022. And yeah, maybe, just maybe, this could be company making. Now, in saying that, we have seen a little bit of selling today, which is understandable because the share price has been in a downtrend for a long time. And those shareholders have now seen an opportunity to get out for or at a higher price than what we've seen in the last few months. But we have seen a bit of selling pressure. Share price at one point today was as high as 7 cents. Yeah, 6.8 cents. So at one point today, the share price was up over 100% for OD6 Metals. Okay, so the other announcement, or the other company, Tryptomine Therapeutics, TYP. Why have I never heard of this company? By the way, OD6 Metals has a markup of 6 million and Tryptomine Therapeutics has a markup of 35 million. But why have I never heard of Tryptomine Therapeutics? I usually have heard most of these companies. It's usually the small mining exploring companies I've never heard of. But therapeutics, I'm assuming this is a healthcare company dealing with therapeutics. Okay, so let's have a look. The only other way I may not have heard this company is if they change their name, which on occasion does happen. So share price up 39%. $6 million funding to fast-track TRP 8803 clinical trial strategy. I am just going to have a quick look at their chart. It's a capital raising. I'm not the biggest fan of share price increasing because of capital raisings. Okay, so this is a recent listing. This is why. This is a recent listing. And look at that. Jump in the share price. Do I have this in my IPO watch list? No, I do not. So I've missed this one. I usually put all the IPOs, apart from mining exploring companies, into my IPO watch list. So I might have missed one. I do have a website to look at, IPOs ASX. Do I have it? I don't think oh, here it is. I do have it bookmarked. So we can go through all the IPOs. And it's not on this list. So we haven't had many IPOs this year. This is via small caps. I'm just wondering if this was just a name change or something. So I'm going to go back through the announcements. I am curious here. Okay, reinstatement to quotation in May. This company had a ticker code EX1, Exopharm or something like that. Exopharm. Yeah, so I do know this company. So it's changing their name. Yeah. On the 8th of March, 2024, Exopharm signed a binding arrangement agreement to acquire Trip Therapeutics, a Canadian-based clinical stage biotechnology company, by way of a Canadian plan of arrangement. Okay, so this is why I've never heard of this company. They were Exopharm. They changed the name after an acquisition, and they became whatever this company's called again. Tryptamine Therapeutics. Okay, so let's move on to the best performing companies today by market cap. And we have Data3, something I missed. Now, I'm going to have a quick look at this because they did have their AGM and nothing really stood out to me. But let's have a look to see in the address whether they do have a bit of a trading update. And I definitely, okay. So there's probably something in this the market really like. So they're talking about current first half projection is pre-tax profit in the range of 31 to 33 million, previous corresponding period 30.8 million. So there is a possibility that that number or that range in pre-tax profit was better than expected. That's why the share price is a little bit higher. So that is, what's that company called again? Data3. Other companies up big. Firefly Metals, FFM, up 9.65%. I'm going to just see, I don't know anything about this company either. FFM, Firefly Metals. Oh, they released an announcement yesterday and share price rallied yesterday. This might be a good looking chart, I reckon, just based off the share price movement over the last few days. Yes, this is a beautiful looking chart. Firefly Metals. I probably have this in, no, I don't. I'm going to have this in, I should be following this company a little bit more. I do not have this company in any of my watch lists. And that's a travesty based off this chart. This company has not triggered any of my screeners recently. Probably did yesterday because of the volume, and it would have definitely triggered my 3-month and 6-month highs. But I've just completely ignored it for some reason. Don't know why. So it's Fly Metals. Where am I? And other top gainers, Andean Silver up. Frontier Digital Ventures. Now, I do own shares in this company. And for some reason, the chart has gone bonkers the last few days. A lot of volume coming in. Maybe there's thoughts. Maybe there's rumors about a takeover. Share price has just gone nuts. Gone from 40 cents to above 50 cents in 3 trading days. So we're talking about a 25% jump in share price. Doesn't seem a lot, but on no news flow, what's been driving the share price higher for Frontier Digital Ventures? They have not received, I don't think they've received a price query from the ASX yet. No, I wouldn't be surprised if they do receive one, particularly if the share price keeps on going up on higher volume. And that's about it. So obviously silver's had a good day because a few silver companies in that. And Experience Co. did release a trading update today, but and there's another silver company, Sun Silver. Experience Co. did release a trading update. I completely ignored this one. Let's have a look at the chart for Experience Co. And that's probably why I ignored it. This company's share price is in a downtrend. And even though share price is up 12% today, it's nothing. There's no volume. There's nothing really in it to make me excited. Okay, so let's have a look at the top losers today. So it's on fairly low turnover. Panther Metals. I'm pretty sure Panther Metals did release something because I just remember this name. Panther Metals down 21.6%. Bonanza Gold intercepts continue at Burtfield East. Market didn't like it. Market did not like this. Bonanza Gold intercepts. I'm pretty sure if it was really positive, you would notice just by the title. Market didn't like it. Share price down 21.6%. Let's have a look at the chart for Panther Metals. Yeah, this is an interesting one. I do like the increase in volume. We've seen a really big increase in volume since the start of October. I'm not sure if this is going to be pointing to anything positive in the future because negative announcement today, but I do like this big increase in volume. This company is becoming aware in the market for some reason, somehow, and we've seen a massive increase in volume. That is usually, not always, but that can be a harbinger for some good times ahead for a company, possibly. Anything else here? Satire, we've already looked at Satire. Calix, I do have that in my top 5 stocks of the day. And nothing else here of note. Star Entertainment Group, we're talking about that company as well. Now let's have a look by market cap. Woolworths, Star Entertainment Group, Universal Store Holdings down 6%. This is an interesting one. This did catch my attention. Universal Stores did release a trading update, and I think they had the AGM, and they released a trading update at 11:22 a.m. So this one that almost filtered through, because I typically stop looking at announcements at about 10 a.m. But because we are in the last 2 days of quarterly reporting season, we are getting a lot of Appendix 4 season 5Bs that are released. So this one didn't get by my filters. So I did have a look at this trading update. I'm a little bit surprised the share price is down, however. And the main reason, I didn't think this trading update was all that negative. But listen to the market. The market is speaking. In fact, I had a look at this and thought, looks pretty good. Talking about Universal Store total sales up 15%. Perfect Stranger total sales up 111%. Cheap Thrills Cycle up 7.4%. So it sounded good on first reading, first look, but obviously the market doesn't like something in it. Share price down about 6%. Now let's have a look at the chart. The chart does look pretty good. A nice looking chart, and even though the share price is under a little bit of pressure today, it's not run for the exits. If you're a shareholder of this company or you're trading, there was a nice little breakout back when they released their results in August, 22nd of August. You could have bought shares not only that day, but for the next month. Share price went sideways. A beautiful signal there. Share price went sideways and then started going up after about a month. Yeah, you could have bought shares at about end of September at a sort of similar price than at the end of August. Anyway, if I was trading this, I wouldn't be selling on this news. I'd just wait to see what happens over the next few days. That's if I was trading it. And I don't know why I didn't buy some shares after they released their results, because the results were good. Intelligent Monitoring Group. I should mention, Novonix released I'm pretty sure they did release their Appendix 4C, yep. And Intelligent Monitoring Group released theirs the other day. And I think the market was a little bit surprised by how lackluster it was. Share price dove yesterday, and it's dove further today, and on higher volume. So that's, I think, the information just is being further digested by the market. So 2 negative days for Intelligent Monitoring Group. And I sort of do understand it after looking at their Appendix 4C. It was underwhelming, put it that way. And what else? Anything else here? That's about it, because I want to get to the top 5 stocks of the day, because I am sort of losing time. Not losing time, but I'm falling behind where I wanted to be. Okay, so let's have a look at number 5, stock of the day. That company is Star Entertainment Group. Down at 12.45%. They did release their Appendix 4C. I have a feeling this might be their first Appendix 4C. So the ASX has told them you need to release these quarter reports now. Did they release one in July? No. So that's I actually don't mind this. So I really want to see how this company is now performing on a quarterly basis. And I am trading this. They release at 7:32 p.m., which is not ideal. That's as late as they can release it on a day. Now, I actually opened this up and went, ooh, I'm very interested. I am trading this. So hopefully this is a really good report and the share price can rally. No, the complete opposite. I went, ooh, no, the market's not going to like this at all. Not only the numbers, but also the commentary. So first thing I always do is have a look at the Appendix 4C. Receipts to customers, pretty high at 338.5 million. That's pretty good. But look at the spending. $190 million in staff costs, almost $100 million on product manufacturing and operating costs, $55 million on administration costs. They pay $8 million just in interest, and that adds up, which means the company was actually operating cash flow negative by $27 million, which is a fair bit. And that's not taking into account property, plant, and equipment. Spent $24 million on that. So that means they were free cash flow negative by $50 million. They also spent some money in investments. They also received money from property, plant, and equipment, which means if they received that, so in fact, they were free cash flow positive because property, plant, and equipment they received was actually greater than they spent by about $54 million. So actually free cash flow positive because they sold a lot of property, plant, and equipment. Anyway, cash on hand about $233 million. So they did burn through a bit of cash, And the main reason behind that was the investments. That's the investments. I'm wondering what that is. Anyway, and then if you go to the commentary, it was not pleasant reading. For instance, there continues to be deterioration in operating performance from a challenging operating environment and the continued implementation of mandatory carded play and cash limits. So just that little bit of commentary, if you didn't see anything else, that would not be good. That would not be viewed good by anyone. Not me, not the market. They also had this, which was pretty interesting. So they had the last 3 quarters and things are just going backwards. So in fact, the first quarter of financial year 24, they had revenue of 428 million and were EBITDA positive by 62. Now they're EBITDA negative and revenue is down to 351 million. So things are just moving in the wrong direction. And they also have this nice little quarterly financials looking at 3, I suppose, no, we're going to say 3 assets: Star Sydney, Star Gold Coast, and the Star Brisbane. They are transitioning from the Star Brisbane or the Treasury Brisbane to the Star Brisbane. But anyway, the main thing about this, fairly negative. Now, maybe the Star Brisbane, as that ramps up its operations, maybe we will see a lot of revenue coming in and a lot of positive cash flow coming in through that particular asset because it is new and fancy. And I think a lot of people like that. So maybe that can be the saving grace for the Star Entertainment Group. But no, not surprising, share price is down. And if we have a look at the chart, it can go lower. The share price can go lower. And today was not a good day. And the share price still a downtrend. And I still don't know why I'm trading this. No idea why I'm trading Star Entertainment Group. I just think there could be some good value here. But I could be waiting. We could be waiting for many years to come. Could be waiting for only a few months. Just don't know. That's a problem. You just don't know when the turnaround could happen, if it happens at all for Star Entertainment Group. Okay, so let's move on to company coming in at number 4, which is Wisr. Wisr, I like this one. Share price up 16.7%. They did release some sort of update today. This is a lending company. That's all I know about Wisr. Who they lend to, probably you and me type people. They don't do mortgages, I don't think. Here we go. Wisr apparently they have a platform which combines digital lending along with financial tools and features to help Australians pay down debt. So I'm not sure if I'm reading this company right. I thought Wisr was some sort of lender, but according to this, not necessarily so. They just help people with their debt with financial tools and features. Okay, so maybe I got this completely wrong. But if you have a look at their announcement, they're talking about loan originations of 77.3 million, which suggests they do and they give people loans, that sort of thing. But the main thing here is everything's increasing, everything's getting better. So loan originations up 54%, loan book of 753 million, which suggests they do lend. But if you have a look at their about section, not necessarily there. Loan book is actually down, but that's okay. Loan book average credit score, so nice, remains strong. 90 plus days arrears, 1.4%, down from 1.58%. Yeah. So this, I did actually look at this fairly quickly, and I did come away from it positive about Wisr. Anyway, so let's have a look. And the market's done exactly the same thing. Share price up 16.7%. It was at one point today, the share price would have been up 60% because the high in the share price was 4.8 cents. Now it's 3.5 cents. So we have seen a bit of selling. So let's have a look at the chart for Wisr. And to be honest with you, I don't really look at this chart all that much because I have a feeling the share price is in a downtrend. Yes. Well, it wasn't a downtrend. And I think there is definitely an argument the downtrend has come to an end. And look at the one-day candlestick, a lot of selling. Share price, 4.8 cents is a really strong resistance level. That's understandable why we have seen selling, because these shareholders who bought at higher prices are wanting to sell. And their enthusiasm is overwhelming the buying enthusiasm. Share price down, and you'd really want to see more or higher volume for the share price to remain above about 4.8 cents or to get back up to 4.8 cents. You just need higher volume. You need buyers coming in, just overwhelming those sellers. And that enthusiasm of the sellers is way more powerful right now than the buyers, and that's why the share price has dropped from 4.8 cents to 3.5 cents. Okay, so that's Wisr. I thought it was pretty good, and I thought the share price might be a little bit higher. Oh no, I think 20% is fair enough for Wisr. Okay, so coming in number 3, we have Calix. Okay, so there is a bit of a link here with Pilbara Minerals. Share price down 18%. Calix and Pilbara Minerals midstream project update. Now, I actually did open this up, even though I have no connection with either Pilbara or Calix. I just wanted to see if this was, positive or negative. And straight away I went, oh, this is negative. Calix and Pilbara Minerals to pause construction of midstream project. In light of current market conditions, Australian environmental technology company Calix and Pilbara Minerals will defer any construction works not currently under contract for the midstream demonstration plant project. Okay, so that's negative. And we can see just with the share price. So it's negative for Calix, not so negative for Pilbara, because this is more important for Calix than it is for Pilbara. And obviously, Pilbara has more of a sway in regards to this project because they're the bigger partner, probably by far as well. So let's have a look at the Calix's share price. And thankfully, I didn't put CLX in, which is CTI Logistics. Okay, so the first thing I noticed when it comes to Calix's share price and chart is why. Why would you take a position in this company unless you had high conviction that their technology will be significantly successful in the future or overwhelmingly successful? Because the share price has been a downtrend for a long time. There's been no sign of the end of the downtrend at all since it went into the downtrend back in late 2022. On occasion, the share price looks like it's going on a run, but as soon as it moves into the long-term moving average channel, we see weakness. It's done that 5 times in the past. And it just moved in there recently, and the share price started to pull back again. Share price now about 80 cents, which is a long-term low, if not an all-time low for this company. No, not quite. Share price is getting back to where it was back in 2020. So that's the thing, Calix. At this point in time, it all depends on what you think about the company. So because I don't know much about Calix, I'm not sure about the technology, whether it's going to succeed, I would just be trading this. And at this point in time, there's no trade here. Share price in a downtrend. If anything, shorting, but I don't short. Now, one thing you could argue, share price got down to 80 cents back in August, and it's 80 cents now. So maybe it's at a support level. Maybe that's it. Maybe that's all you could argue positively about Calix's chart. And that's me talking about this company without knowing anything about their technology. When I say know anything, I know a little bit, but I definitely don't know as much as some investors out there. And that's very important. Conviction or what you think about their technology. But just be aware that even if you have thoughts about a technology and you think it will succeed, doesn't mean you're going to be right. And in a way, technical analysis can help you. Coming in at number 2, I actually expected this company to be down in the worst performing companies. Spark New Zealand share price is up. So why am I talking about Spark New Zealand? Now, I took a trading position in Spark New Zealand because I thought there was some value and I expected a bounce. Didn't get the bounce, but I just decided to hang on to my shares. And then the company releases a financial year 25 guidance announcement. And just look at the title, Spark reduces financial year 25 guidance. So straight away I went, oh, share price is going to drop today. In fact, even in the commentary, they're sort of apologizing. Management's apologizing for their, what do they say? They said, Spark Chair Justine Smythe said the board of management acknowledged that our current financial performance falls short of what is acceptable, and we understand the disappointment our shareholders will be feeling. So they decrease EBITDA guidance, they decrease CapEx, which doesn't concern me. Dividend guidance has been dropped. So this was a profit EBITDA downgrade. It's EBITDA, it's earnings before interest, taxation, depreciation, amortization, and and what's I? A is amortization. I is, net investment income. I've never seen that before. Interesting. Anyway, so this is a downgrade. And the commentary, they're apologizing to their shareholders. So why is not the share price down? I have a feeling the market knew about this. I have a feeling the market expected this. In fact, possibly the market expected worse, and that's why the share price is up. So this one does surprise me a little bit, because typically when a company does release a downgrade like this, the market jumps on it and the share price drops. Obviously, the market expected this, and I'm a little bit surprised the share price is up. I fully expected the share price to be down. Now, funny enough, when this company is traded on New Zealand Stock Exchange, and I did have a look at how it was trading on in New Zealand, and the share price at one point was up 3% in New Zealand. So that's, even though I'm shocked the share price is up, I sort of knew it was not going to drop a lot before the ASX even opened, because of what was happening on New Zealand. And by the way, this is all I did. SPK and ZX, this is what I Googled, and ZX, and it comes up with a little, this. Yeah, so 1 point today, share price was at 3 point, so no, it wouldn't have been up 3%, would have been up about 1.5%. I lied. No, it wasn't really a lie, I just misread. Okay, so that's Spark. I've very rarely seen a share price go up after a profit downgrade, but this is an instance where the market expected it, and I forgot to show you the chart. And you can just see that by the chart. I think the reason why the share price has absolutely tanked is because the market fully expected the downgrade, and that's why the share price has dropped from almost high threes to $2.72. And I would be surprised to see this is the worst it gets for Spark. So I'm still trading it. I haven't sold out just yet. But interesting for Spark New Zealand. Okay, so that's Spark New Zealand. Coming in at number one, we have a Woolworths. I'm still surprised the share price is down 6% on first quarter sales results and trading update. The market didn't like it. And the market didn't like it because, I'm going to see if there's any analysis talking about it here. Let's have a look. E&P Capital Analysis, Philip Kimber, which I actually have seen that name bandied around a lot in Capital Brief news articles, said that while worse quarter one sales beat estimates in its core Australian food division, the revised guidance fell below market expectations. Okay, so an E&P expects consensus earnings per share downgrades of between 5 and 7% final result. Share price down at 6%. So the market is quite savvy. So they expect earnings per share down 5 to 7%, share price is down 6%. That's the reason why the share price is down, is because even though their numbers were pretty good, revised guidance. So I actually completely missed that. Now, to be honest with you, I didn't really look at this announcement all that closely because it's Woolworths. But I did have a look at the share price and I did see it was down. I was like, oh, that's interesting. So straight away, I put this at number one in my stock of the day. So in fact, when I opened this up, so very quickly I went through it. So improved trading momentum, but first half earnings outlook challenging. So you could take away a few things there. Improved trading momentum sounds pretty good, but earnings outlook challenge. So they're not sure. And then group sales up 4.5%. That's what you want to see with Woolworths. Group e-commerce sales up 21.2%. Not sure what this group VOC NPS is. So obviously they did a bit of a trading update here. And outlook, that's what would have driven the share price down. Okay, here we go. So this is what I missed. This is from Amanda Bardwell. Is that the new CEO? Yep, COO. This is what Amanda says. While the key Q2 trading period remains ahead of us, Australian food EBIT for the first half is forecast to be below our previous expectations. So that, if I did read that straight away, I would say, oh, the share price would be beaten down, because whenever the management decreases their expectations, the share price will go down. We currently, well, apart from Spark, but I think the market expected that. And I don't think the market expected this. We currently expect our first half financial year 25 EBIT, including 40 million of incremental supply chain costs, to be within a range of 1.5 billion and 1.5 billion, within a 50 million range. Is that 50 million yet? Compared to 1.595 billion. So a decrease from the first half of 24. And looking ahead, we expect customers to remain extremely value conscious, with cost of living pressures to continue for the remainder of financial year 25. I think they forgot a Y there. Our key focus for and blah, blah, blah. Now, the thing about this company is it's staples. I was going to say discretionary. It's a staple company. People need to buy food. So you're not going to see much decrease in food. However, maybe some of the other brands will be affected, like Big W. Anyway, so let's have a look at a chart for Woolworths. Is this an opportunity? So I remember last time the share price got to these levels, everyone was going, oh, what a great time to buy Woolworths. So share price got below $30. I still remember that. That was in May. And the share price, I think, is heading towards that. Share price down 6% to $30.82. Chart does not look good. And I think a lot of this, one of the reasons why the share price rallied from July into September is because people were saying, oh, share price is a really good price, down to $30. Share price started to rally and everyone was getting on that train. A bit of a shift in sentiment. Everyone's getting on board the Woolworths train. And then that sentiment died away because of a few things. You can see the share price took a bit of a dive in September, 23rd of September. What happened that date? I forget. 23rd of September. Oh, acknowledgement of ACCC legal proceedings. That's right. In court over alleged misleading claims. And I think that destroyed sentiment. See share price dropping, and it's fallen a fair bit since then. Okay, so that's Woolworths coming in at number one, the stock of the day. Now, I am running out of time, 46 minutes, which means no time for any comments or charts. If you have any questions, any thoughts, anything, any answers, any clarity, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.